In this video I showed you how to record bonds. We take the seat of the company that issue the bonds. We do a bond evaluation as well. The case is taken from chapter 15 of my textbook.
I'm Carsten Berkau, full accounting professor in Osnabrück. My BasicsClips will help you to understand international bookkeeping. In the case study KILDARE, the company issues 5 million bond at 10 euros each. The coupon rate, which is the interest the company has to pay annually, will be 4%. The time to the maturity is 15 years, which means on the 31st of December 2015, KILDARE Limited has to redeem the bonds. This results in a payment of 50 million euros to the bondholders. The valuation of a bond depends on two components. One of them is the coupon, which is to be paid every year, and the other one will be the payment which is to be made at the time of redemption. Our calculation is based on the present value for the bond, which will give us the coupon rate. Here is 4%, so 4% multiplied with 50 million gives us 2 million. Which we must multiply with an annuity factor. So the annuity factor is 1 plus 4% in the power of 15, as there will be 15 years to maturity, less 1. And in the denominator we got 4% multiplied with 1 plus 4% in the power of 15. The second component is the present value of the redemption payment. So the total redemption payment is amounting to 50 million. And for discounting, we multiply this value by 1 divided by 1 plus 4% in the power of 15. The present value is 50 million. This value will remain constant. Even if we make payments during the course of time, the value will always be 50 million euros. The bond valuation only changes if we alter the payment terms. For example, we pay every 6 months, or if the bond is redeemed by a premium, or if, for example, the bond is issued on a discount, let's say at 49 million. Next, I prepare an interest and payoff plan. I entered already the rate of interest of 4%, so it gives me instantly 2 million of interest, which I rename by coupon. In the first years, there is no payoff, which means the value of the bond stays at 50 million. Only in the last accounting period, the bond is redeemed, which means the company has to pay off 50 million. The bond's value then will turn to 0. Following the international accounting standards, bonds must be valued based on amortized cost. This means we have to apply the effective rate of interest method. In order to calculate the effective rate of interest, we prepare a vector for all the payments which are relevant during the accounting period. I consider the coupon as well as the payoff, which is in the first years always 0. And we will see that all the time the company pays a coupon of 2 million, but in the last accounting period the redemption of the bonds takes place. At the beginning, the company receives 50 million, which I consider here by a negative sign. Easiest way to calculate the effective rate of interest is by the internal rate of return. It is provided by Microsoft Excel. Internal rate of return function over the entire vector of the payments will give us 4%. As we can see, the effective rate of interest equals the nominal rate of interest for the bond. The recording of the bond is in an account interest-bearing liabilities. We make a credit entry in the interest-bearing liabilities to the extent of 50 million. The debit entry is recorded in cash bank. This bookkeeping entry is to be recorded at the time of the bond issue. At the end of the accounting period, the company has to make a payment which is for the interest. We call the interest account here coupon account. Our company makes a bookkeeping entry number 2 to the extent of 2 million, which we credit to the cash bank account. In the interest-bearing liabilities account, the 50 million stay until the time to maturity. Following the international accounting standards, the bond valuation only changes if, for example, the terms of payments will change. For example, the coupon is paid every 6 months. Another reason could be, for example, that the bond is issued with a discount, say in this case here 49 million only paid out. In this case, you see instantly that the effective rate of interest will change. If the effective rate of interest is different to the nominal rate of interest, the valuation of the bond has to be adjusted. We don't do this here in this video. However, you can find an example in the chapter 14 of the textbook Financial Statements.
Now that you have seen the video, take the textbook and study the case.